Good morning, everybody. This is the live market open for October 7th. I'm Yohay Elam, a Forex Crunch and Market Movers podcast, and doing the morning show for FX Street. So what will we have today? As usual, we'll talk about the recent developments in markets, examine charts and levels, what's on our schedule for the next 24 hours, and most importantly, we're awaiting your questions in the chat. So we had quite a few interesting developments yesterday. We had the trade balance in the United States show a deeper deficit, and at 48 million. This is, of course, negative for GDP, and also, but didn't have a big impact on the dollar so far. Okay. And then we had the milk prices in New Zealand rise by 9.9%. That sent Kiwi dollar to breaking higher. We had oil prices jumping to nearly $50. That helped the Canadian dollar. We had also positive news for copper. We'll examine soon the big rises in commodity currencies, each one driven by its own commodity, and we have interesting levels on all three. Moving to majors, Mario Draghi, the president of the ECB, just said nothing, and we have the triangle, the wedge in euro dollar confined, continuing to impact the pair. We had John Williams of the FOMC still talking about a rate hike in 2015. So far, it doesn't move the dollar. We'll have to wait for more hints, maybe from Dudley, maybe from Yellen. And the Bank of Japan just a few hours ago, no change, but they did hint about maybe moving in October 30th, as we talked about. Also, dollar yen, similar to euro dollar, is confined to very limited ranges. Okay, and we had more negative figures from Germany and from Spain with negative industrial output. So these are the recent developments, and let's see how it looks on the chart. Let's bring it on right here, starting, of course, with euro dollar. Here we go. So euro dollar is at 112.34. Let's see if I can get this properly set. We have, meanwhile, a question from Jake. And Jake asks, I will look forward to some analysis on NZD. And here is the question. When economies cut or raise interest rates, do the currencies typically reach a new low for the year? I mean, low or high? Well, it depends on the trend. It depends on expectations. Currencies move first by expectations and then by rate hikes, or rate cuts. So it doesn't necessarily mean a low or high for the year. Anyway, we'll reach the a change in direction makes a bigger difference. A hint about starting to raise rates is sort of marks the low for a currency, and a hint for cutting rates marks the high. Now let's move back to the chart here. Euro dollar. 112.35, a little bit lower than previous levels, but as we see, it's quite limited in a range. It's quite stuck. Okay, and I'll show you another euro dollar chart. I think I've shown it also yesterday. Here, another charting system. We're seeing euro dollar trade in a triangle, in a wedge, very limited downside. A downtrend resistance has been formed back in the summer and is being challenged day after day. So we moved once again to the top of this downtrend resistance and back down to the middle. Will we see a break out to the upside today? Will it be a false break? Will we see it, the pair sliding back down? And that remains an open question. Let's continue with other currencies. Pound dollar has been moving higher, enjoying this sort of sell-off in the US dollar, but not going too far too fast. We did see it break out of the previous range, but it's limited right here, just under 153. These are levels we've also seen last week. Okay, dollar yen. We had the Bank of Japan basically saying no change, but ready to act in October, looking for the semi-annual release. But I don't think they'll act so soon. It depends on if Japan indeed fell into a recession, depends on what the government does, and depends, of course, on politics. So if we zoom out a bit, yeah, this is very limited 121.20 on the upside, 118.70 on the downside. These are the downside is the post-Fed level, but all in all, we're just limited. Okay, usually the trading range is much more narrow, and hugging the 120 level couldn't be more accurate at the moment. 120.02. Okay, dollar CAD. Oh, we're seeing it now. First of all, we're seeing here a pattern of a double bottom. Okay, that's at 131.12. That's been the post-Fed level in late September, and in mid-September, sorry. And now we're seeing it move again lower. So we're seeing it at 130.06 at the time, just now, real time, dipping below 130.12. Of course, it's not only the low of mid-September, but also the round 130 level, and we're sliding a bit lower. Levels to watch below are 129.50 and 128.60. Okay, and on the top side we have the 130.70 level. Okay, and Kiwi dollar making the same move, just rising above 72 cents right now. That's thanks to rising copper prices. The price of copper topped $5,200 per ton. So we've seen it, the Australian dollar gradually rise. The Australian dollar also enjoys the vacation in China. It's Golden Week there, so we have no new bad news. And we've seen it rise gradually together with the price of copper. And now, as we began our show, as the hour turned 8 GMT, it made a move above the 72 level. The level above is the post-Fed high of 72.70. Support awaits only at 71 as I see it. Okay, and now Kiwi dollar for Jake. The same move as well. We've seen it yesterday managed to settle, sort of consolidate its gains above 65. Let's add another line here, which was yesterday's highs. It turns now into this 65.30 level, turns now into support. Let's try to zoom out and see the next level above here is 67, another round level. We're currently at 66.20. So we're seeing quite a recovery. That's mainly thanks to the recovery of milk prices. For the fourth consecutive auction, the global dairy trade, prices of milk went up, this time 10%. It's important to remember that they fell for 10 consecutive auctions beforehand. So we have this milk auction every 2 weeks. And this bi-weekly event always moves the Kiwi because New Zealand exports a lot of milk. Jake has another question. How many currency pairs are a good number to be trading at one time? I think that no more than 3. I mean, 3 open positions, if that's the question you're asking, because otherwise you're confused. You have, well, everybody, we only have one brain, and it's hard to keep track of too many things at once, especially retail traders. We have other things on our minds. We're not trading all day. It's not our profession. So I think 3 is the sort of magic number. If it doesn't mean you have to be limited to 3 currency pairs to trade on in general, but I would say 3 open positions. In our morning show, we're covering about 10, 12 currency pairs, a little bit for everyone. If you like euro dollar, or if you don't like it, you don't have to trade it. Some people like more crosses, and you can of course change each time to a different currency pair. You don't have to become an expert. There's not much expertise there. So but in terms of open positions, I would say no more than 3. Okay, these are in general. So we're seeing euro dollar limited, confined to range, and dollar yen also at 120. But commodity currencies are certainly, and the pound as well, are certainly reaching high ground. Yes, we had a dip of dollar CAD under 130. 129.97 is the new low. We're seeing oil prices continue rising. We've seen WTI just scratch the 50 level, and Brent crude around 53. Regarding the Kiwi, Jake asks, do you see the Kiwi moving back down. Well, in terms of the price of milk, that's supportive of the kiwi continuing up to resistance 67. On the other hand, we have other factors moving currency pairs. We have expectations for a Fed hike, and if we have something hawkish from one of the members, we could see the dollar rising and the kiwi limited. And we have China coming back to play tomorrow. So if we have bad news from China, we could see the kiwi fall. Now, the kiwi is less vulnerable to what's going on in China. Australia is much more sensitive to that, but it's still, we have these commodity currencies moving in tandem, so we might see a move down there, okay? Let's see what we have in store today. So we have at 8:30 GMT, we have UK industrial output. Each time during the show at 8:30, at 30 past the hour, we have a figure from the United Kingdom. Let's see what we're expecting. So we're expecting, we have 4 figures. In fact, we have industrial output, which is the wider figure, and then we have manufacturing production, which is more narrow, but tends to have a stronger impact. Then we have the year-on-year and the month-over-month. So manufacturing output production year-over-year is expected to slide by 0.1%, but that would be better than last month. Month-over-month, we're expecting a rise of 0.3%, and month-over-month also in manufacturing at 0.3%, and the wider industrial output year-over-year is expected to advance from 0.8 to 1.2. So we're expecting, I would say that expectations are relatively high. And recently we've seen quite a few misses on economic expectations from all over the world. What's called the surprise index is going in the wrong direction, okay? So we might see a disappointment there. Let's go to the next events of today. We have, for those of you trading the Canadian dollar, which dollar CAD just dipped under 130. We have Canadian building permits. Yesterday we had a disappointing trade balance figure from Canada and also weak IV PMI. So for those of you trading the loonie, this is an event to watch. But of course, the price of oil also plays a huge part. For those of you trading the pound, we have the NISR GDP estimate. This is a private institute releasing their GDP estimates every month for the past 3 months. So it's not a quarterly release usually, it's just the last 3 months. For this release, it'll be for the full Q3, for June to September. So that's interesting to watch. Let's see what expectations show us. We don't have expectations for this, but last time it was 0.5. I tend to believe it'll be lower, 0.4, 0.3, because in the United Kingdom, like other places, we're seeing things slowing down, okay? And at 2:30 GMT, we have crude oil inventories. This is coming from the US, but of course has a huge impact on Canada. And we're expecting the EIA to show us inventories rising, more glut in oil, more spare oil, 1.75 million. It'll be a slower rise than last time, but it'll still be a rise. Okay, so these are the main events for today. I would say a bit less eventful than yesterday or tomorrow, but it's still market moving, and sometimes we have breakouts coming at the least expected moments. So sometimes, well, we had the kiwi rising on the stronger milk prices, but we had a sort of more spontaneous rise in oil prices, and the Canadian dollar reacting to that. Tomorrow morning we have German trade balance, not that important, but we have bigger events tomorrow. We have two key events. At 11 GMT, we have the Bank of England's rate decision, and it's not only the rate decision, which can be quite boring because they usually don't make any change, but they also released the meeting minutes. So we had 8 members vote for leaving policy unchanged, including Mark Carney, and 1 member, Ian McCafferty, wanting a rate hike. But we might have some change this time, and of course the commentary coming out from the minutes can also have more to do with that. Okay, so and then in the evening time here, 6 GMT, we have the Fed's meeting minutes. I think I mentioned this yesterday. We had not so good. Well, we had sort of a more dovish sentiment from the Fed in the September meeting that sent the dollar down. But since then, we had Janet Yellen being a bit more hawkish, and since then we had the weak non-farm payrolls. So now we can maybe expect something confusing. The market doesn't know what to expect. On one hand, the minutes are stale from the beginning from mid-September, and since then we had the weak NFP. On the other hand, they're revised towards the last minute. That means that they might be modified to sort of sound better. So in any case, the market will be reading the minutes. If they talk more about rate hike in 2015, I think we can see the dollar rise. It'll set the tone also for Friday. And if not, we'll see the dollar continue sliding, especially against commodity currencies, probably less against the yen and the euro, which are safe haven currencies. Okay, let's go back to the charts, and I'm waiting for your for more questions. Albert thanks me. Good memory. Thanks, Albert. Don't know exactly to what thing you're referring to, but yeah, kind words are always accepted. Let's move on to dollar Swiss. We're seeing the dollar weaken also against the Swiss franc. It's not a huge move. The Swiss franc moves in tandem with the euro, so we're seeing it slip under 97. All in all, we have a wide range of 98.40 to 95.20. And now we're at the bottom of the more narrow range, but we still have room to fall here. Euro Swiss also a bit lower. So the Swiss franc is strengthening just a bit. Maybe the Swiss National Bank is not intervening enough in markets, so they allow their currency to strengthen. We're at the bottom of a narrow range at 108.70, usually around 109.20. In any case, so we're now at the bottom. The top for the wider range is, of course, the round number of 110. Okay, Euro Pound moving lower thanks to the rise in the pound and the fact that euro dollar is stuck, or now a bit sliding in range. So we're at 73.30, which I see as support, resistance at 74, high resistance at 74.40. The round 73 line also works as more support. Okay, it's an interesting cross. We have lots of trade between the old continent, or as the Brits say, the continent, Eurozone in this case, and the United Kingdom. Euro yen, the safe haven pair, stuck in range just around 135. It did move up. It did challenge resistance at 135.40. Guess we can now move that a bit up to the recent highs right here at 135.60. In any case, we're at the top of the wide range, 135.60 to 133.15. And the dragon also moving up. We're seeing the pound moving up across the board. So now we also challenged resistance here at 135.50, and the pair stopped exactly at this point. So this pair has really nice technical behavior. Support at 183, followed by 182.50, 182, and 180, of course, is the low level above. The big level below, sorry, the big level above is 186. Okay, I have another question from Jake. Jake asks, how much of a drawdown could be considered okay? 2% only, as some teachers might say. I think it is wrong because fundamental shifts require patience and it can cause pairs to move in wide ranges for extended periods before finally playing out. I don't have an answer to pull out of my sleeve, Jake, regarding your question. I don't have a specific percentage to spell out, but 2%, yeah. But I do agree that 2% may be a bit too conservative, too limited, because we do have sometimes bigger movements. Maybe 5% would be a better better drawdown. Anyway, if you're asking it in the context of signal providers, then it's important to look at, well, I don't really support these kind of signal providers. I think you better trade on your own. But if you do look at signal providers, they show you a chart of their performance only for the past month or 2 months or even 1 year. That means there's probably either they didn't trade for enough time and the signal isn't serious, or just before that big rise that you're seeing in their excellent results, you might see a big drawdown that they're trying to hide. So if there is consistent, steady trading, steady increases, limited drawdowns for, let's say, 2 years, that would be better. And the drawdown, I guess, 5% would be better. Yeah, to answer your question. Any more questions from Albert, Jake, Stuart, Jax R. Wild? We have a few regulars here in the show, in the room, and in the meantime, talk about other themes, moving markets. Let's see what else we have in store for you. Yeah, on Friday, Canadian job figures. This is quite an interesting week for the Canadian dollar. So let's see if we have a continuation of that move. Yeah, the only way is down for the loonie. It didn't stop at the double bottom. That didn't hold. We're seeing it at a new low every second. Wow, it's 129.92. I don't know how many of you trade the Canadian dollar, but many see it as boring. As Canada is considered a boring country, but I think everything's wrong. And I think there are so many opportunities on dollar CAD. Nice feature I like about this currency is that it doesn't always react that fast. That means when you have a jobs report, for instance, this Friday in Canada, watch out and see how fast the currency responds. Sometimes we see, of course, on the immediate headline, it moves in the right direction, but then it continues moving a bit forward. So it's not exactly, like the NFP sometimes choppy to all directions and wipes out everybody. It's more gradual move, so retail traders can usually also catch the move. Anyway, we're seeing oil prices up, Canadian dollar up, dollar CAD down. And we have also figures today and also on Friday from Canada. Okay, maybe we'll tackle a few more charts. We talked about them yesterday as well. We do have here gold. Well, when the mood in markets is happy, we have currencies rising. We have commodity currencies, commodities risks taken more, all these things going up. So we have the price of gold. You see it made a nice break above the 1142 level. And the next one to watch is 1156. We're still not there yet. The bigger scheme of things, we have more resistance at 11170 and 11180, with 1200 being sort of another very round level. On the downside, we have 1070 and just under 1100. Okay, Josh, good morning to you. Josh asks, how about euro dollar? I mean, what's going on with the currency? Most interesting thing I find about euro dollar is this triangle, which I've shown you guys before. So we're seeing it each time rising towards downtrend resistance and falling back down. That'll be interesting. If your question is in the context of the Canadian dollar, if it's more predictable, then the answer is no. That means sometimes it's harder to catch moves on fundamental news in euro dollar, but the trends for the longer term are usually quite clear. So sorry. So that's where I see things going. Albert asks, I read in the Swedish newspaper that VW, Volkswagen car manufacturer, has been exposed of cheating with the diesel engines, etc., etc. This will affect the stock, of course. Yes. Well, Albert, this scandal has been going on for, I think, 2 weeks or so. And of course, it has a big impact on the Swedish economy, but we have also factories, plants of Volkswagen in Belgium, in Sweden, in Spain here, Seat. So we have lots of impact on the old continent, on the whole industry. When when the stock fell quite a lot, especially in Germany, we had also the larger stock market fall, and we had sort of more worries in stock markets. And when stock markets are falling, what we've seen recently is that the traditional safe haven yen is strengthening, and the euro, which has become also a safe haven, a funding currency, is also strengthening. So we had shares of Volkswagen plunging, stock markets plunging, euro rising. Okay, that was the that's what it affects now. Currently, of course, this continues to be big news for Volkswagen. They're expected to fire people, to make painful decisions, but the immediate impact on the euro is a bit weaker than on the first week when the scandal just broke out. Okay. A question from Jake. Jake asks, with your strategies, what % of trades are closed at a loss? Well, Jake, I must tell you, I'm not. I don't trade at the moment. I focus on publishing, so I can't tell you about any specific strategy that I use that works, and what loss and profit. In general, if you keep a risk-reward ratio of 3-to-1, then you can afford to lose more trades than you win, and each winning trade is worth, of course, much more. I'm using this magic 3 number right here, but that's in general sort of a rule of thumb. In general, if you have, you know how to lose well, that means not lose too much on every trade and make big wins, then you can have you can lose more trades than you win. Josh says, you're a legend. Thank you, Josh. Thank you very much for the compliment. Anyway, more questions coming from Stuart. Jacks are wild. Josh, Jake, somebody else I see here in the room. Anyway, let's get back to the chart. Here's the euro dollar I talked about before, answering Josh. And we soon have the release in the United Kingdom, so it's better to focus just for a few seconds till we have more questions on pound dollar. So pound dollar continues moving higher, 152.88. Next resistance line that I pointed out here is 153.23, and then 154. Let's see if we have good news, if we can rise to those levels, or if we have bad news. Levels on the downside are 152 and then 151.50. So we have that coming out in just under 2 minutes. It can be a mixed bag because we have monthly, yearly figures both for manufacturing and industrial output. So it can be a bit confusing. In any case, let's put the 30-minute chart. It'll show us the exact reaction. And maybe, let's see, just take a look at euro dollar beforehand. Yeah, very, very narrow. Now sliding in range before it rose in range. Okay, we have 2 more questions. I'll try to answer it before, at least one of them before the UK figures. Stuart asks, if crude oil inventories are in CAD reveals oversupply, does that mean CAD will bounce up again? No, if we have oversupplies, that means that we have too much oil, lower oil prices of oil, weaker Canadian dollar. But that means that dollar CAD could bounce higher, if that's what you meant, Stuart. So now we're seeing dollar CAD sliding. We're at, where's the chart? Just hugging the 130 level, the 130 level. So that's what we're looking at. Let's see. We have another question from Albert. Thanks for the answer, mate. Not to mention the Air France director's clothes being torn apart and forced to jump the gates. Yeah, I've seen that yesterday. They were amusing pictures. Sorry for this. My simple question. Still new to trading. that kind of soaking up everything how it runs. Thanks a lot, Yohay. You're such a big help. Thank you very much, Albert, for the comment. Of course, when we have big corporates in trouble or big corporates in doing well, it has an impact on the wider stock market and or a negative, yeah. So we have pound dollar jumping higher, went above 153. We had probably positive figures from the UK. Let's see, we still don't have that on the screen. Actually, we do. So, really good news from the United Kingdom. We have, well, only one slight disappointment. Year-over-year, manufacturing production dropped by 0.8% instead of 0.1, but industrial output month-over-month jumped by 1%, much better than 0.3 expected. Manufacturing production month-over-month also rose 0.5, and the year-over-year industrial output rose by 1.9%, significantly better than 1.2. It's important to remember the figures for the year-over-year figures are usually more important because they give a bit wider picture of the trend of the economy. Month-over-month, we have lots of noise. Same thing as with looking at 5-minute charts and daily charts. Daily charts give us the bigger picture. Hourly charts a bit less, and 5-minute charts give us the noise. Okay, so we're seeing a positive reaction on pound dollar. The high so far 153.08, resistance at 153.20. Yeah, 153.25 maybe. Let's see if we can approach this level. This was the bottom back last week, and then when we broke below this level, the pair didn't look back up. So this is a tough nut to crack. 153.25, I would say, on pound dollar. Let's see if we can challenge this level, or that the pair is running out of steam and not being able to move higher. Okay, so this is some breaking news we had just now. Yeah, and we're seeing it slide back down again. Well, it remains higher than beforehand. I think there was either some kind of leak or either markets began pricing in a better figure, because you can see this move higher on pound dollar. Well, but it's important to remember it's also related to general dollar weakness against commodity currencies that we've seen also in CAD, AUD, and Kiwi. Anyway, cable is currently battling 153. Let's see if we can move higher. We're looking forward to more questions, and in general, we're looking forward to feedback. Currently, we're still in a beta mode, pilot mode. We'll do an official launch probably next week or in the following one, and we thank everybody for participating, of course. Looking forward for feedback. Let's, in the meantime, look at the bigger themes in markets. Should have that somewhere here. Yeah, so we didn't talk too much today, just a bit about the Federal Reserve. To hike or not to hike, this is the question. With the poor NFP figures, we have a chance that the Fed will not move in December. Nobody's talking about October, but it also depends on the next NFP figures and GDP figures from the United States in the coming months. ECB forced to act or not. Yesterday, Mario Draghi just inaugurated an art collection at the ECB headquarters in Frankfurt, and he didn't say anything. He talked about the wonderful art, but that didn't move the euro. Euro-dollar is still confined to this range. Another big question for the markets is what's going on in China. Chinese economy is slowing down, but how bad is it? Is the situation getting worse or not? So when China comes back from holiday, we'll hear more Chinese official stock. We'll see the stock exchange in Shanghai reopen. We'll talk about that, of course, tomorrow morning, and that's of course an issue. We talked about the Bank of Japan at the beginning of the show. Let's talk a bit more. So the Bank of Japan decided not to raise rates, but there are a few more topics there on the agenda. First of all, they didn't raise rates because they're waiting for the semi-annual report at the end of October. Then we'll get an assessment of the economy, GDP figures. We'll know if Japan is in recession or not. And then the Bank of Japan can assess what it's doing. It's also waiting for the government to act. If we have more fiscal stimulus, we need less monetary stimulus, okay? And another feature is the TPP, the Trans-Pacific Partnership. This is a very wide agreement between 12 countries in the Pacific Rim: Japan, the United States, Australia, New Zealand, Peru, Chile, Mexico, Canada, and probably Malaysia, and they probably missed a few others. Anyway, it's a huge agreement. It's 40% of global trade, and the authorities in Japan really wanted to approve it. Now, they have an agreement in principle, but it has to be ratified by the parliaments, including the US Congress, which is very tough. And we have lots of political infight in Washington. So we need to see the US approve the agreement. And if Japan acts too aggressively on monetary policy and the yen weakens, we can have US lawmakers a bit angry with Japan, and maybe they'll fail this agreement. So this also, I think, plays somewhere in the back of the minds of policymakers in Japan. That's one of the big themes here on markets. And let's see the last thing for today. It's currently not in discussion, but what's going on in Greece? The economic situation there is terrible. We had talks resume about Greece yesterday and on Monday. Greece wants some kind of debt restructuring, so does the IMF. Germany opposes that. The review is still going on. The Troika, or whatever they're called now, the institutions are still in Greece doing the review. They're probably going to delay it as long as possible. And basically, it's the extend and pretend. Okay. More questions from Albert, Stuart, Josh, Jake, Jack, anybody else? I'll be glad to answer. Let's take another look at the charts. Let's see this pound-dollar move. Still limited to 103. Oh, as we speak, it's moving a bit higher. Well, just another pip higher, 153.09. We had these positive figures. The rise of industrial production, 1.9 year over year. That's been a real positive. And we have another question from Jake. Thank you very much, Jake, for all your questions. Would you say that the overusage of leverage is the most dangerous account management pitfall facing many new traders? Do brokers offering low leverage as the default on accounts have much more credibility than those that do not? Do you favor 10 times leverage, 20 times leverage? What % of brokers would you say are not good? Those are lots of questions, Jake. Let's try to tackle them one by one. Let's begin with the last one. What % of brokers are not good? Most of them. I don't have a specific number. There's so many unregulated brokers, and also the regulated ones. We've seen them have bad management, bad risk management. Okay, so you should you should use regulated brokers in one of these jurisdictions: the UK, Australia, the United States, Switzerland, and maybe also Cyprus. They're getting much better, and New Zealand, and maybe Canada. Maybe I missed a few, but countries that have more experience with regulating brokers. Most of brokers outside these jurisdictions might be bad. Okay. A question regarding leverage. Leverage, yeah, can be dangerous, especially when we have higher volatility. And in the past year, since September last year, we had much more movement in markets. So with more volatility, you have more danger, more opportunity, and the advice is to use less leverage. So brokers offering less credibility, yes, that means they're not trying to tempt traders with high leverage. And that means that they are more experienced with better traders, more experienced with more experienced traders. Okay, so this is also a sign of good governance of serious brokers. If you see a broker offering 1,000 leverage, 1,000 to 1, that probably isn't a regulated broker. That probably is a place where you would find it hard to withdraw money. 10 times, 20 times leverage, both are okay. The limit in the United States is 50 times, but 20 times is more than enough, I think. 10 to 1 leverage should be also good enough. Did I miss any other question that you asked? Yeah, so in general, yes, using too much leverage is quite a pitfall on for traders. Another question from P asks, what was the reason for the kiwi strength last night? Well, milk prices, basically. Let's put back the chart and let's see if we have extended moves in the kiwi right now. Yes, well, a bit more, 66 cents, 0.14. And the big reason was the rise in milk prices. So we had 9.9% in milk prices. That was the fourth consecutive rise in milk. And that was, of course, positive because New Zealand exports milk. But it wasn't the only commodity rising. Also, oil prices, WTI has reached around $50. Brent is higher. Copper is above $5,200. So all the commodity currencies are on the rise. Dollar CAD fell to 130. Australian dollar is at 72. These are the main reasons. Okay, so I guess it's looking forward to maybe just one more question if we have time, or we'll begin the wrap already. Okay, let's go back to the presentation, the short presentation I've prepared for you. Okay, Pan, yeah, sure, welcome back. Anyway, so this is the wrap for the live market open on October 7th, Wednesday. We have had quite a few developments in the past 24 hours. We had figures from the US, unimpressive, trade deficit of 48 billion. Kiwi milk prices rising at 9.9%, that sent the Kiwi higher. Oil prices jumped, that sent the Canadian dollar higher. Mario Draghi said nothing, that kept, of course, euro dollar in the triangle, in the wedge. John Williams of the Fed said still a 2015 rate hike, but that was a repeat, it didn't move markets. And the Bank of Japan left policy unchanged. We were expecting a press conference from Shinzo Abe, but nothing market moving there. There's still a door open for a rate hike in late October. The Eurozone data is impressive. German industrial output fell. China is still on holiday. That also helps the Australian dollar rise. Today we had in the UK industrial output. It came out better than expected, 1.9% rise year over year. So the pound is higher. The move began before the release. And we have Canadian building permits at 12:30. Another estimate of UK GDP at 2 GMT, and crude oil inventories that impact Canada at 2:30 GMT. Okay, so we have Canadian and UK figures. Let's see what's going on in markets. The headline is commodity currencies up, safe haven currencies stuck. So begin with the Kiwi. Thanks to milk, we're seeing this trend moving higher above 66. 67 is the next level. Aussie dollar at 72, also extending the range. 72.70 is the next level. That's the post-Fed high. 71 is support. Canadian dollar, it fell below the post-Fed low at 129.92. We still don't have a confirmation of a break under the very round 130 level. Cable, thanks to good figures, it's also on the rise. Resistance is close at 153.23. Support 152.20. Euro dollar sliding within a narrow range, 112.40. Resistance at 112.90. Support at 112.15. And here's a better chart that I'd like to show. The wedge downtrend resistance still caps euro dollar. Okay, bad figures in Europe also limited any kind of gains. Dollar yen very hugging the 120 level. We're expecting more news from the Bank of Japan only later in October, and the Fed minutes tomorrow evening are, of course, very important. So attention is growing also towards these events. So that's the wrap up for today. And we have a minute or two to answer two last questions. So Jackstar Wild, good morning, asks the question, government intervention doesn't mean it's good, just means people that lost money can be responsible for themselves, so they cry the government to save them. Wanda, not ECN. I think we do need to have some kind of regulation, but it shouldn't be against traders. It should be a bit against bad brokers, and regulators have to do a better job in preventing and punishing fraud, less than just limiting traders. Okay, that's what I think. Tico, good morning. What do you think about ODD or NZD strong fundamentally? I don't think they're very strong fundamentally. I think they're enjoying this rebound in commodity prices, but the general trend remains to the downside because China is still slowing down. There's just too many commodities. The changes in commodity projects, in mining of iron, of copper, these things take a lot of time. We did see a shift in oil. Now to turn on the tap or to close it regarding oil, and regarding shale rigs in the United States is faster, but big mining projects are hard to stop and start. So we have, I think the general trend is down. We're seeing corrections right now. Okay, so this is the morning show for today. Thank you everybody for coming. Thank you very much for your questions. Hope I provided answers for everybody. Looking forward to see you tomorrow morning, same time, same place. That's it. See you tomorrow. Safe trading. Bye-bye.